All right, what is going on, future me? Want to kick off this week with my pre-market plan, as I do with every week, and just kind of jump straight into it. We do have the dollar pulled up, the daily for the DXY on the chart. And pretty standard here. Nothing super crazy to talk about. We do have the full move into 105 starting to play out. A little bit of indecision in this most recent daily candle close into 105, but I still do expect the move into 105 overall. Once again, we have this bouncer break level at 105.50, 105 sort of area. I've been highlighting this every week. I do expect this to act as a level of resistance. I do want to say though, on the weekly and monthly, you could probably say otherwise. But the only way that I would, obviously confirm this sort of double bottom structure to play out is obviously the break and retest of this 105 sort of area. Until then, resistance is still resistance. Moving into the weekly, that becomes a ton more clear. We do have kind of a higher zone here at 105.70, 106 sort of area. And everything pretty much looks to be on track for that move to play out. As we can currently see, the most recent weekly candle close is extremely strong. We have the full and confirmed reclaim of 103. And so as far as my sentiment and how I expect this to sort of play out, and what just the chart is telling me, is obviously we have the momentum and everything we sort of need to move into 105 area. Whether or not we bounce from that level, I'm not sure. We're going to have to see. But obviously, this is still a respected level of structure. As we can see looking left, we use this as once support and now once as resistance. Twice as support, once as resistance, excuse me. And so with that, right, we could, potentially see something along the lines of this, right? We make this move into the 105 area, reject into 103, and maybe, even move lower than that, right? Or other side of that, which, I mean, maybe a little bit more practical. We make the move into 105, back into 103, and move higher, depending on where sort of the Fed is, where the Fed is at. As we know, they are hinting at a potential pause, at least into the end of this year. And I believe their first rate cut is hinted at next year, September sort of area. So I mean, all the sort of the writings on the wall as far as the Fed potentially pausing rates. Although I've said in previous pre-market plans, I don't think that it was likely. There's a ton of more literature and press releases, excuse me, coming out affirming that. Obviously, with JPY speaking a week, 2 weeks ago, about how tightening credit conditions around banks are putting downward pressure on inflation and this whole thing. There might be a chance that we don't even need to hike rates any further, excuse me, and as a result, will probably encourage the Fed to pause as it currently stands. So, with that, again, I am of the sentiment that we are making the full move into 105. Again, even the daily, the weekly point to that, literally the monthly, right? The reclaim of 103 is extremely strong. 3 days left in the month. And so, I mean, yeah, this is looking this is looking like this has the makings, excuse me, of a reclaim from every sort of aspect. Even when we look at this on the quarterly, like, look at how strong this reclaim is on the quarterly. And I feel like we've highlighted this in the past around the break retest into the 120s. I mean, this is looking very similar, although it's not to a T. It still does look like it has maybe a little bit of substance. I am still of the sentiment that we're going to see further dollar downside sometime in the future, but as it currently stands, again, I feel that the 105 move is sort of programmed, as I've mentioned in previous pre-market plans. So I'm going to be of that sentiment. Gold shorts at the moment are looking pretty valid, and I'll get into that as we cover those charts. So pretty quick on the dollar, nothing super crazy. Once again, of the sentiment that we're so close to it, right? We're of the sentiment that we make the full move into 105. I want to see what sort of reaction we get at this bouncer break level, whether it be a break, retest, or a rejection and move lower. But again, with the amount of steam on these weekly and monthly candles, I mean, who wouldn't expect further downside for the dollar, especially when, again, we're going to be we're potentially pausing the rate hikes and kind of keeping rates around, 5.25 at the moment, to allow inflation to cool. So obviously having higher yields on the dollar is going to make the index and overall the currency much more attractive for domestic as well as foreign investors, right? Because again, when the dollar's yielding so much, 5%, this, that, the other, people are going to want to rotate and put money into the dollar, increasing its strength. Hope that makes sense. Going into the JPY basket, pretty simple and straightforward. We are on track. As I've highlighted in previous pre-market plans, we had this big leg up, sideways accumulation, and now making the leg down. So pretty definitive for me, pretty simple and straightforward. We do have confirmations pointing towards the full move into the downside, as we can see with this most recent daily candle close. I mean, look how bearish this looks, right? Like, there's a small microstructure here at 74.77 that I'm not even considering, and even with that, we're continuing to break that, right? Like, obviously, this most recent candle close does have a solid body below that kind of small microstructure, so it should be smooth sailing right into the 7200 sort of area. Not a lot of traffic looking left, other than what's been happening last year, right? So no recent real price action within this area, making for a very clean move into the 7200s, and that's kind of what I will be expecting. We can look at it the weekly as well. Just affirms that, right? Broke this sort of weekly range low. Once again, only level of structures to really move into would be that 7200 sort of area, that new sort of range low. Even if I were to put this fib low to high, they have we can make a small case at 7400, 7377, but even then, with the way that we have this more recent price action looking left, I would expect the full move into 7200. Just again, structurally speaking, we have a level of support that has been respected not once but twice, and so I'm expecting the yen to continue to show weakness into those areas. Monthly candle, 3 days left in the candle here as well, just affirms that for me as well. Move into the 7200s. Obviously, we have a lower low and lower high structure forming. This most recent lower high at 8300. Obviously, thereafter, we're going to need a lower low. And so we'll continue to monitor this into the coming weeks. But once again, I am still of the sentiment that we're going to continue to see yen weakness. Everything on the chart points to that. And so I'll be treating it as such. Pretty quick on the indexes today. I mean, everything's pretty much moving swimmingly, right? Everything's pretty much on track as far as what I've mentioned in previous pre-market plans. Looking at the pound, let's move on here. There we go. Looking at the pound, right? I know that I've mentioned in the past that, obviously, I've mentioned this all the time, right? That I would like both currency indexes of the pound and the yen to remain decoupled. While we're seeing extreme weakness on the yen, we are starting to see a small little signs of life on the pound, at least from the daily chart, right? There is a level of microstructure here, sort of a range mid between the range high, the new range high at 124, and the range low at 122.50 sort of area. I'm not going to put too much stock into that just because, it's a much cleaner level of structure here at 122. As we can see, looking left is a more local high, a sort of range mid and stopping point for the pound and price overall. As we can see with these big moves up, we start to see sort of a small loss of momentum into those areas before making the definitive move in either direction. And we've seen that, in both sides, right? We've seen it here, obviously to the downside here, and then back to the upside, forming a base and making the move higher. So, obviously, again, I would love for both of those currency indexes, the pound and the yen, to remain decoupled so we can see price start to trend. And that's actually what we saw end of this week for GJ. But again, I want to see price start to reclaim these levels. And although, it might look like we're seeing signs of life in that respect on the daily, the weekly and monthly are starting to look extremely bearish. Something I do want to highlight here as well, this is a 618 rejection, also a level of resistance here acting in confluence. And so that kind of points towards a new, we can even call it like a higher low, right? Because as we can see, that we have the low, a new high, a higher low, and a higher high locally speaking. And so a higher low would, most likely be at 120, 121 sort of area. That just makes the most sense to me. Also acting in confluence of the monthly, right? We have this arrow that we've drawn. If we were to get this reclaim, which we did, of the 122 sort of liquidity zone, we make the move into the trend line and we make a retest into this sort of area. Most recent monthly candle, although we do have 3 days left in the month, anything can happen, but it is looking like we're going to make that move back down, right? Not, I'm not expecting any sort of wick formation to the downside to be put together in the next 3 days, right? Like, it doesn't seem likely to me. So I would expect, as far as I'm concerned, short-term downside before the bounce and move higher. Only thing that would kind of deter me from that would obviously be the full reclaim of levels below 121, 120 sort of area with strength and momentum. But outside of that, right, I'm still of the sentiment that we should be seeing at least, a short-term bounce from that area. But in the meantime, it is looking extremely bearish on monthly and weekly time frames, as we can currently see. Bearish into 120, which is not great for obviously wanting to see those two indexes decoupled. But I'm going to be keeping tabs on it, not giving me a ton of context just yet. More so leaning towards the daily, or rather the daily and the monthly, to see kind of where we fall within this these two sort of scenarios, right? Obviously either bullish, we get the break retest, which we already have the reclaim, we're just waiting on the retest, or reclaims on levels below 120, 121 sort of area. So that pretty much sums it for the pound, the yen, and the dollar. Pretty simple and straightforward. I would say everything's pretty much on track as far as that's concerned. Moving into GJ and the pairs that we'll be trading this week. Oh man, I did want to mention too, I know that in previous pre-market plans I've said, this last pre-market plan, I mentioned that a big move is coming, and that's exactly what we saw. We saw price start to squeeze in this area around 172 and finally break on Friday to the upside with a lot of strength. Like, it was nuts. And so we can start on the monthly here. Look at this monthly cup and handle. Look at this, right? Like, how could you be bearish with a candle formation on the monthly like this? Huge rejection to the downside, solid body. Looks like it's going to close solid body in the next 3 days here to close the month out. And just again, I mean, we're pretty much, the measured move is into 180, 179.50 sort of area. And even outside of that, we do have a ton of clear sort of traffic looking left, right? There's a ton of clear traffic into 188. I'm not going to say that we're going to get that high, right? Awesome if we did. But longs are looking extremely valid. Even when we look at the quarterly, like super high time frame stuff, we've, blown past the 618. We still have a month and 3 days left in the quarterly candle, so anything can happen in that respect. But just generally speaking, as we can see the chart right now, typically in my strategy, when we see a candle like this blow past the 618, obviously last stand is at the 786. And with seeing how much momentum the quarterly candle has, right? Obviously seeing the 786 at 180 as a potential stopping point. Also the monthly cup and handle measured move into 179, 180 sort of area. It definitely adds a ton of context to see further upside. We can even look at the yearly. I've mentioned this in my previous pre-market plan. The next sort of level up is 177 into sort of 180 area for that range mid. And kind of getting off of the super high time frame stuff, looking at the weekly, more near-term levels, right? Look at how bullish this structure is. We had the break, retest, and move higher, right? Typically, you see 3 consecutive bullish candles when you see these sort of formations. I believe it's like the 3 soldiers or something like that, we can call it. Not something that I live and die by, but it is looking extremely bullish on the higher time frames, weekly, monthly, and quarterly, even the yearly, right? So all of the writing is on the wall to see further upside. More near-term levels, of course, is 175.50 sort of area to see maybe some sort of bounce before a retest and move higher. And so with that, we have local highs here as well, around 171 to 172 area, or maybe even a move all the way into 168. Let's look at daily and intraday time frames to see if we can get that sorted, right? So as we can see, I feel like I've mentioned this 100 times, right? We have a high, a low, a higher high, a higher low, a higher high, a higher low, another higher high, a higher low. And now, of course, what we have here is the potential formation of another higher high. Where exactly that higher high stops up, I'm not too sure. Maybe it could be right here at 173, or it could be at 175 before the new higher low at 172, right? If I'm wanting to get in a retest, personally speaking, obviously I would wait for 172 sort of area in this general range, right? Between 171 and 172 to see wicks in this area and rejections to the downside to see a higher low created. But as it currently stands, again, with seeing how bullish the higher time frames, weekly, monthly, and quarterly are looking, there's no reason why, personally speaking, we shouldn't see that full move into 175 before any sort of retest or before any sort of breakdown and bounce thereafter. And obviously looking at the 4 hour, becomes a ton clearer. And I want to highlight this here as well. As I mentioned in my previous pre-market plan, we did have this very sort of long and choppy sideways accumulation. And with that, just microstructurally speaking, right, we started to see higher highs and higher lows form within this before the eventual break. And so seeing this most recent 4 hour candle as bearish as it's looking, we can kind of call this an indecision candle. But even with that, right, like it doesn't look the best, I would say. So as far as intraday time frames are concerned and where I'd want to position myself, there's more shallow retests here around 173.50 area, but perfect world, I would be wanting to wait for 172.50, 172 sort of area to see a break and retest. We already have the break here, obviously retest and move higher, whether it be into 173 once again or the full move into 175. Obviously, with the amount of momentum we're seeing on higher time frames, there's a very high likelihood that we don't see any sort of retest just yet. Maybe we see, again, a microstructure sort of retest within this area before the move higher. But both of which I would consider. Obviously, the more shallow retest here on the 173.50s and the deeper retest into the 172 sort of area. We can take a fib as well, this swing high to swing low, and that lines up perfectly, right, with the 172 sort of area. This sort of box is also called they call it the last kiss, right? So typically what you'll have is the big break, and typically where you want to position yourself is on the retest of this box. I know initially in my last pre-market plan I had the box positioned right here, but as we continue to see accumulation and consolidation, I moved it up just a bit because it made a much more sense. It added a ton more context, and I'm glad that I did that, right? And so again, as far as where I'm wanting to position myself, let me move this back. There we go. As far as where I'm wanting to position myself, there are two areas of interest for me. Obviously, on the 4-hour, just generally speaking, we have the 172 sort of area, also in confluence with the box, right? You have the last kiss, so it comes back and kisses the box before it makes the move higher. Basically, just a range break and retest, to put it simply. And then other side of that, we have a more shallow retest, potentially at 173, 40, 50 sort of area. As far as, I'm concerned. And so with that, I know that I mentioned as well this double bottom last week. And so the measured move of that, very similar to, I was going to mention the cup and handle, that'll be 179, but the double bottom measured move brings us straight into 175, the next level of structure. So that definitely adds a ton more conviction to see further upside. Just waiting on a sort of retest before I can position myself and get in. And so 1 hour becomes extremely clear as far as what the areas of interest I just mentioned are going to be. Obviously, we had this crazy accumulation, this crazy consolidation, excuse me. This is the weekly open last week, literally bounced in between this range. And I did mention I'm literally waiting for the range break. That's exactly what we got. As the range started to develop, as we can currently see, we had this ascending triangle start to form, very beautifully played out. And overall, as far as going into this coming week, it's extremely clear as far as what I'll be waiting on, right? We have this local swing low to swing high, 618 in confluence with this ascending triangle breakout, this sort of neckline, also in confluence with this level of structure looking left. Obviously, this is held as a level of resistance. And so perfect world, and just generally speaking, right, like the most likely place for price to come back and retest is the structure that it broke out of, right? We've held as resistance here for so long. It just makes the most sense to me to see price come back and test it as support before making a move higher. Obviously in confluence with the 618 locally, and in confluence with the 786. I can even bring this maybe, a little bit further back here, and it just adds a ton more context, right? We, even this big wick right here, still a 618 confluence, a bit more locally, still 618 and 786 confluence. And so that's exactly what I'll be waiting for. But once again, obviously seeing how bullish and how much momentum we're seeing on the candles, high, with the higher time frames and everything else, that adds another sort of layer, or another sort of area of interest outside of the 172.50s and the sort of 172.60s in confluence to 618, and that would be obviously what I just mentioned on the 4-hour, the 173.40, 173.50 sort of area. This is the most recent weekly candle high, and we also have a previous level of structure here at 173.40. Perfect world, obviously we have this break, sort of consolidation, and building a base on top of 173.40 and move higher. We've seen this many times, but that would be a more shallow retest. So that's something that I'm going to want to monitor into this coming week. It could even happen as early as Sunday, Monday sort of deal, right? We do have Memorial Day coming up this Monday, obviously NFP week, first of the month, and everything else. JOLTS coming out on Wednesday, dollar consumer confidence, and then manufacturing PMI for the dollar as well. So a lot of news centered around the dollar, not so much the pound and the yen. So it's just going to be It's just going to be raw sort of price action and what we're seeing on the chart as far as that's concerned, and from my perspective. But once again, two areas of interest overall. Again, either the shallow break and retest of 173 sort of 40 50 area and move higher, or the deeper retest into the previous level of structure, which just seems more practical because we've seen this so many times, right? Like, again, even looking back here, we have a new high formed, or well, not necessarily a new high, but we have a range break, a reclaim of this sort of April 23 high, and you get a retest of that level, because it's been used as a level of resistance, and now obviously we want to turn it into support. So again, perfect world, we see the retest of 172.50 before the move higher, in which I will be getting long, or a more shallow retest of 173.40, 50 sort of area before they move higher. Something that I also want to highlight as well, the break of the last week candle highs is bullish as well, because technically we're creating new highs. So that's something that I would consider also if we start to see strength and even, start to see wicks and rejections to the downside on top of this level. But that's as far as I'd probably go. So once again, 3 areas of opportunity for me personally and my future self. I hope you're watching and listening. We have the break of the last week candle highs forming new weekly candle highs. I'll probably even put a buy stop or wait for wick rejections to the downside above this level, or the shallow break retest into 173.40, 173.50 area, or the most practical sort of perfect world entry for me would be this ascending triangle sort of neckline retest, or like the 172.50, 172.60 area in confluence with the 786 and 618 sort of retest. Hope that made sense. Pretty simple and straightforward, nothing super complicated. Once again, as we can see, typically price will retrace back to the most recent level that it broke out of. We consolidated so long at 172.50 sort of area before making this big move and squeezing to the upside. It just makes the most sense to want to retest that level of structure as support before moving higher. Whether that's after we move into 175, or or we do it beginning of this week, we don't know, but that's going to be kind of how I play it moving forward into the coming weeks. Hope that makes sense. So that moves into gold. Whoever took gold shorts last week, more power to you. I'm sure you killed it. I am as much as I hate to say it, right? Like, I am going to be a gold bear into these next coming weeks here as well. Let's start on the weekly. Actually, let's start on the monthly. Look at how bearish this looks, right? Very obvious triple top. This most recent monthly candle looks extremely bearish. Huge rejections to the upside, starting to form a solid body into moves lower, or into lower levels and structures and everything else. And as we can see, just looking left, every time that we rejected from these areas, from this level, we always make the full move back into the 1600s. Even if we stop short at 1815, right, we're still making a move to the downside regardless. And so this is the third time that we've tested and rejected this structure. So, I mean, obviously just looking left and looking at history and just being practical and logical about things, right? After seeing this rejection, we have to make room for a move to the downside. It just is the most likely thing looking left that we'd want to see happening. Obviously, even on the quarterly, same sort of deal. Every time we reject the all-time highs around 2077, we get the move lower thereafter, at least into the 1600s. Even if we stopped up at 1800, there's more than enough room to take shorts there. So looking at the weekly, let's see. Looking at the weekly, right, we are sort of at a bouncer break level here between 1930 and 1900 overall. And so, right, like the only way that this would continue to be bullish, we would obviously have to see dollar weakness, a rejection of that 105 area that I just highlighted. And then sort of the break and retest, obviously retesting this channel and the range high that we broke out of at 1930 area to continue to be bullish, right? Like there's still a potential to see a higher low formed above these levels, but until then, until we see sort of rejections to the downside and momentum starts to slow down, I'm not going to call for that just yet, right? Like obviously looking at the most recent weekly candle close, there is a good amount of momentum. Perfect world, right? If you're a bear, you would love to see more solid body closing on this, but this is still extremely bearish as far as my perspective is concerned. And then even when we look at this on the daily, look at the look at the amount of momentum we came into 1959 with, and then obviously the rejection thereafter on this most recent daily candle close. The only way that I'd potentially get bullish here, or like I'd potentially switch my bias back to bullish from wanting to take shorts at these levels is the reclaim of 1959, excuse me, and I would only take that into 2000, right? Like unless we saw clear momentum above those levels. But as we can currently see, and I feel like I highlight this all the time, we have this higher high and higher low structure forming. That structure is now shifted, right? We have a high, a higher low, or excuse me, we have a high, a low, and now a lower high forming. So obviously the next step in that would be a lower low. And structurally speaking, looking left, the most likely place for me at least to see a lower low formed would be in the 1915, 1900s sort of area. And so that's where I'll be targeting. Only way I would sort of sideline myself and wait a little bit is the reclaim of 1959, because as we can currently see, that would be a new shift in structure coming back above the lower low that was formed. And so it becomes a ton clearer here on the 4-hour chart. So a ton of different things to take a look at here. We have a double top that formed here as well. The measured move takes us straight into, let's take this here, neckline break. It takes us straight into the next sort of level and area of structure, being 1930. We made that move. We had the break and retest, the neckline retest already at 1959. And so if I get another retest of 1959 and no reclaim, no strength above this level, I'll be taking shorts all day, every day. As we can see with these arrows highlighted, I'm going to be playing this level to level as I always do. Also in confluence with this ascending channel. Again, only way I would switch my bias is if we see some sort of channel break, and that would only be short term into the 1980s and potentially 2000s. The real bullish move happens between 1980 and 2000 overall, right? Because again, there's no clear traffic. That would be a new shift in structure off of these lower highs, right? Hope that makes sense. Let's look at the 1 hour. 1 hour becomes a ton clearer here as well. We have a potential double bottom here. Measured move takes us back into the 1980s. Once again, the bigger sort of bullish move would be from 1980 into 2000 if we do see that, which to me is highly unlikely. Even the reclaim of 1959 is pretty sketchy, right? And as we can see with all the balloons that I have here, sells on weakness for me are valid. This is a new range that we sort of we closed in, so I'll be taking sells on the range high all day, every day, especially with the amount of dollar strength that we're currently seeing. And then if we start to see downside and breaks below 1936, 1937 sort of area, I'll take that all day, every day on a break and retest. Going to be a pretty volatile week here as well, with jolts and obviously unemployment claims and all these different things, NFP coming out as well. So it's going to be a pretty crazy week for gold, I'm sure. But even again, if we do reclaim 1959 and make that move into 1985, sells are still valid, right? Like obviously we can currently see very well respected level of resistance once acted as support looking left. And so, excuse me, sells are still valid below 1980 overall. So once again, 3 areas of interest. The first being 1980 for sells, the second being 1959 for sells, and then the third being the break and retest of 1937 sort of area for sells. I would not take, I mean, we do have a 618 confluence here. I wouldn't take the 1970, 1969 sort of sells. I would just wait for the reclaim of 1959 and levels lower than that if I wanted to get bearish, if I wanted to get into shorts. So pretty simple and straightforward. Once again, right? Like we're pretty much bearish on gold. Structure is overall shifted, across the board as far as gold is concerned, as we can currently see. And yeah, I mean, gold shorts are as valid as can be, as I mentioned in my previous pre-market plan. I just wanted to wait for the 1959 sort of area to break before confirming that for me. But as we can currently see, right, playing this level to level, I'll be targeting the 1900s if I do get into shorts here. So pretty simple, pretty straightforward for my future self. Nothing super crazy this week. I'm glad that we closed into this range here for gold as well, because that means that tagging shorts at 1959 should look good, especially within this sort of area between 1955 and 59. And then obviously breaks and retests of 1936. 37 area are valid. Overall, the bouncer break level on the 1 hour and intraday time frames for me is the 1985, 1980 sort of area, as we can currently see. GJ, same sort of deal. I'm waiting on a break and retest. That could either be one of three things, excuse me. Either the new formation of candle highs, weekly candle highs, the break retest of the weekly candle high here. or the sort of shallow break retest of the 19, or excuse me, of the 173.40 sort of area, 173.50 sort of area for a shallow retest, and then a deeper perfect world retest of the ascending triangle neckline and 172.50 sort of area in confluence with the 618 and 786. That would make the most sense to me. Obviously, looking left, we've held this as resistance for so long. It just makes the most sense, most logical, practical sense to see price come back to the area it broke out of most recently. Obviously, we have a ton of different candle closes here as well, so there's a ton of support and structure here for that retest. And so that pretty much sums it for my pre-market plan. Simple and straightforward, as with every week. And so, future me, God bless you, bro. Love you. Hope you're, living life to your utmost potential, doing your thing. And yeah, God bless you, bro. God bless everybody watching, and take care.